Hi friends, this is Bank Nifty 5 minutes spot chart on 22nd November 2022. In this video, we will try to identify some edges in a sideways market using some advanced line work. So before building, developing those advanced lines, we need to have proper context built around it. So proper context plus line work will give rise to some extraordinary trade opportunities. So let us try to analyze market here candle by candle and then see how market behaves further. The very opening of the day's candle started with a bearish candle with a strong buying pressure. There's a very attractive opportunity to short the market at this level looking at the kind of bar that is present here. However, see this, look at this long wick at the bottom. So this shows the buying pressure. So when such formations happen, it would be rather be helpful to wait and watch how market behaves further and then enter the market. So it's straight away entering such markets is bit dangerous. So what has happened in a couple of other weeks will help you understand how such candles are manipulated. So people who might have got frustrated to enter market when price spoke this low might have got bit disappointed when market has taken a U-turn. So with the third candle, the bullish candle in the opposite direction. So we'll wait and watch how market behaves further. So price temporarily stop here and is returning, and that is happening at the inward frequency. Certainly a good opportunity to enter market. However, looking at the shorting the market at this level, but looking at the manipulation done at this level, we'll rather wait and watch and see how market behaves further. We should be able to understand if sellers in this zone are truly capable of breaking this low, and then if an opportunity arises, then it's a good opportunity to short the market, not immediately. And look how the candles are appearing as they come down. The buying pressure at the bottom of the wicks is clearly explaining that it is not a good opportunity to short the market right away. Rather wait and watch. So there's a lot of selling pressure. Now the buying pressure has turned into selling pressure. How come that suddenly happen in just few candles? So there you can assume that there are some good market manipulators active in this zone who want to push the market down towards sell side and or otherwise make retail traders believe that market is going to fall with some candles like this. But we as price action students, we will watch price very carefully. Look at the number of candles that has taken to move the price from here to here. Just two candles. And look at the number of candles that has taken for price to come down from this level. 1 2 3 4 5 6 7. Okay, and look at the buying pressure at the bottom of the wick, and suddenly there is selling pressure in this candle at the top wick. So all this is indicating that there is a good deed of manipulation going to happen. So we'll wait and watch how price behaves further. So price is unable to break this low and then moving back again. As I mentioned, no, it is only the play of market makers to induce retail traders and make them confused to take such positions. Now price didn't break this high. Okay, it just poked and then is coming down aggressively. Now the area of interest for us is this low. Okay, this low is because that is the low that was earlier manipulated, the latest candle that has manipulated all of the lows. So we want to see how price behaves once it touches this line. Clearly price didn't touch that line, which means this is another level of manipulation. Now should we enter trade at this position? No, going long. So for that we have to draw a pitchfork. Okay, so maybe we can make use of the latest low here and then see how price behaves. Now this is a valid pitchfork because the midline of the pitchfork is respected by price, and let us see how price behaves further. So we can even fine tune this pitchfork to the latest lows, or at times we can keep it intact. So the touch of the pitchfork has created a powerful bar, that is outside bar and a fractal bar with buying and both buying and selling pressures. So this is a good opportunity to go long for the simple reason that this leg is a manipulative leg, and price is now taking its reverse direction. That means the big players have entered the market now. They want to go long. So this is a good opportunity to go long with this pitchfork midline as a target. Let us see how price behaves further. Obviously, price has broken this high, okay, but it failed to touch this line, okay. So we anticipated the price will touch this midline, but it failed. That could happen because price changes its frequency when it's about to, or when it is respecting midline of the pitchfork. So that could, one of the possible reasons is that there is a shift in frequency, and this is the latest frequency that you can assume. So it is not wise to go long at this position. We will rather wait and watch how price behaves further. Okay, so price drifted away from the main pitchfork. So since there is a drift away, we'll again wait and watch and see how price behaves. Now this is the inward frequency of this major bump up, and since market has closed above this low, this high, we can assume that this is going to be a solid market structure, which means that if price again comes to this zone, we can go long at this market with a stop loss below this low of this candle, because this is the latest low that is manipulated. The first low manipulated is this low, the second low is this low, and this low. So this is the latest one. So we can assume that buyers, if they are coming down, they will not let the market fall below this low, and that's the reason we can enter long trades when the price comes here with the stop loss below this low of this candle. Now price is moving sideways once it's crossing. So let us see how price behaves further. Again, some good level of manipulation happening. Price immediately after breaking this high is reversing, and then price did not close below this low, and then market is going up. So rather, we will not go long or short in this position. We will wait the market to retest our zone. If at all there is an opportunity, only then we will enter. So clearly there is a sudden spike again. Okay, so this spike, this move has wiped out all the retail breakout traders on either side, even if it is a poke or breakout. So either ways, this move by market makers have certainly wiped out both the players on either sides, buyers and sellers. And let us see how market behaves now. So clearly, as you can see, once it has broken, poked this level and then reversing down, it is the reverse direction that the market is going. And when it is coming down, look at the buying pressure as the market approaches this already proven supply demand zone. Okay, and exactly as we expected, the price touched this inward frequency of this zone. Now this is a solid structure, and the inward frequency of the solid structure, touch of inward frequency of solid structure, and then a fractal bar with like this is a good opportunity to go long. Okay, so now let us try to bring some line works in alignment with this context. So to do that, let us draw a pitchfork in the major dimension. The major dimension, you don't see price respecting this line. However, if I draw, this is standard pitchfork. However, if I draw a modified pitchfork, you can see that price is respecting this midline of the pitchfork beautifully in the major dimension. Now, what about the minor dimension? Even in the minor dimension, you can see that this is a proven pitchfork, and price is again respecting this pitchfork again. And can we draw some other line in alignment with this context? Probably we can bring about this frequency line. Okay, so this is a frequency line which price is generally expected to touch. but at times the frequency line will shift to the inward frequency rather than outward frequency. Okay, so when I place this here, this green line is now being respected by price already once, and at the same time the price is respecting now the line again. So there is multiple intersection of lines at this zone. Okay, how many you have? 1, 2, 3, 4. 4 lines touching one by one candle, and look at the buying pressure. So this is certainly a good opportunity to go long, and this time, since this is a manipulative move, we can expect that the price will reach the latest high, because market makers have done now enough manipulation. Now they want to go long. That is how we can assume. To do that, we can draw another pitchfork in the opposite direction. Say, as we expected that price has tested this frequency zone in the bottom wicks. Now if I put up the same wick in the opposite direction and we'll clone it and keep it at the latest high, we can expect the price will touch this line at least. Okay, and to build more context around it, we can also add draw a pitchfork and then see how price behaves. Okay, so let us see how price behaves further now. So price has clearly touched that level, and obviously a good opportunity to enter market. If you look at this trade in terms of risk reward ratio, okay, this trade might have given you so far, this is assume this is a stop loss. This trade has given you so far as much as 1:2 risk reward ratio, but still we can continue this trade assuming that these buyers are willing to go long. Maybe we can expect the touch of price touching this upward line of this pitchfork, and that may give us a 1:3 risk reward ratio. Okay, maybe this is where we can keep our target, this line, somewhere around this line. So tomorrow I'm expecting price to jump up, and obviously that is how the buyers are going to do the things. That is on buying side. However, if you look at the price in this zone, okay, now what has happened here is price has clearly poked this level and then has been close about it. So there is also an opportunity for market to go down, touch this zone and then come back. So either ways, buyers are going to win this market as of now, and that's happening with a good volume and good length of trade. So this is our analysis, guys, and if you're interested to know how to read the price and then take advanced trade positions using price action and how to build proper context around it, so you can approach us and we can teach you how to build context and take trades with greater confidence. Thank you so much. See you in another video.